Cool. So welcome to the first meetup of the year for the Westbank Real Estate Investors. I appreciate you all coming out. Thank you. Emil Hurst Jr. Normally does the interviews. He's not here tonight. He has a pretty good excuse. He just had a new baby boy, Maze, was just born a couple days ago, so he's looking after mother and baby at home. Exactly. But don't clap too soon because it means you're stuck with me doing the interview, so I apologize in advance. Look, I want to welcome our guest tonight, someone I've known a while now, someone I definitely respect, Michael Harrison Jr. He also came up with Emil. Him and Emil have known each other for quite a while as well, so we're really happy to have him tonight, and we'll get stuck into his story for those of you who don't know him. So before we get stuck into his story, though, let's give him a warm welcome, hey? So, Mike, I'm just going to start with the question Emil always starts with, which is just what even got you into real estate in the first place?
So, the way I got into real estate was actually, I guess, happened to walk into it. Somebody told me it was a good idea. It was 2005, March, and I was like, you know what? I have money saved. I want to do something. And someone's like, I guess buy a rental property. So I did. I went out and bought a rental property. It was a double. I was actually renting. But I decided I'm going to go buy a double and be a landlord. March 2005 is what I did.
Did you live in one side, or was it a pure rental?
No. I bought it, and I kept renting because it was actually smarter to stay with my roommates at the time and then, make some money just renting that out,
so
actually.
2005, it sounds like a good year to buy, right?
Oh, it was a great year. It was March 2005. I was ready, right? Real estate is coming. Had my first vacancy in July 2005, so I said, you know what I'm going to do? I'm going to rip this carpet out, put some new floors down, get this place real nice. August, signed a lease, beginning of August. Whoop. Guess what? Katrina, as most of y'all know. And so that was, that's when I decided to jump into real estate, was March 2005.
Perfect. And how did you deal with that? Did your house, where was the property?
So it was in St. Bernard Parish.
St. Bernard Parish, okay.
If you're not familiar, there's a little bit of water down there. A little bit of water. So
what happened? So at that time when Katrina came, you had just the one double?
Correct. Yeah, I just had that double.
Walk me through it. How did you deal with that? What did you think?
So that was pretty rough. So I was very fortunate. I remember sitting at the table, buying flood insurance, and the bank was like, you don't need it. And I was like, I'm gonna get enough just in case something happens, because during Betsy, I heard another hurricane that flooded St. Bernard Parish, that the water was high. So I said, you know what? It's like $600. I bought flood insurance. I was fortunate, got paid out. I paid off the mortgage. And then, so I was like, okay, cool, I'm good. Sitting there, don't know what to do. So when I bought the house, I had no guidance. I was just like, real estate's a good idea. Everyone told me that. No one owned rental property that told me this. So, I got the best advisors in the world.
Okay.
So Katrina happens, I get paid out, pay off the mortgage, sitting there, don't know what to do. Actually took about 1.5 years before I actually made a decision what to do with this house.
Okay.
I took out an SBA loan to do it, and then I ended up renovating the house. I acted as my GC, had no idea what I was doing with that. But I pulled it off, and I had money left over. And that's where all of a sudden it was like, maybe there is something to real estate, especially if there's value to unlock,
Yep.
And then from there, still didn't know what I was doing, but decided I'm going to buy another house because I renovated this one. So I know how to, I know how to renovate. Went and bought another double in the Bywater in 2008. At that time, it's not what it is today, but I kind of was like, I think this might be a good opportunity. Still own the house, it's my house, and it's panned out to be a pretty good opportunity.
Awesome.
Still not knowing what I was doing. In 2011, bought another house after reading a book by, it was called Creating Wealth by Robert Allen. He talked more about real estate. I always look to invest in stocks and things like that. And he started talking about local real estate groups, for sale by owner. And so that's when I bought that third property on my own.
Okay.
And when I say I don't know what I'm doing, I say it jokingly because I was buying real estate, but I really did not have any guidance at all.
Yeah. You believed in the direction, but you were figuring it out as you went.
Right.
Yep.
Maybe. Like, like I thought it was. So I had 3 properties, and it seemed like something that was working.
Tell me about so you're renting those properties out.
Correct.
Tell me about that. Like, you're doing that yourself. So you're managing the properties. What was that like? Did you have issues? Was it? Tell me about that.
So definitely big time issues, right? So at the not knowing how to run it, no one to look to for guidance. I was running it from a point of view of like, if I'm a good person to the tenants, they're going to take care of me. Blah 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 blah. Terrible advice, right? You got to run it like a business. I mean, you have to have a heart, but you have to look at it as a business. And once I started doing that, I actually gained more respect from the tenants when I would say, sorry, we can't do that. Or when I was more straightforward and started running it like a business, it just got easier for me. But when I was trying to, this or that, and didn't view it as a business, it was actually harder.
Yep.
And then that's when things started to change a little bit.
Okay. How were you figuring it out? Because you said you didn't really have guidance. Like how I'm sure you got some guidance.
Yeah.
But like how are you figuring out what to do?
So a lot of it was the internet. I mean,
Yep.
searching, how to do an eviction. I mean, I went to the courthouse and it was like, how do I do an eviction? They told me. I mean, I asked a lot of questions to people that I thought knew, but I didn't have anyone else in my world that was doing it. And so I really was just
Yep.
going through the motions and taking notes and,
Okay.
finding out the hard way.
So then what was next? So we're talking like 2011. So you
Right.
got 3 properties
Right.
At that point, renting out. What was your next
Yeah,
step?
so the next step was, it was great, kind of slow, the real estate thing, a little bit of cash flow. So I was looking, how can I generate more capital? So started doing a little more reading, looking on the internet, came across Bigger Pockets. That's when that was still kind of new, reading the forum. They recommended local meetup groups. That's when I found NOREA, the New Orleans Real Estate Association meetup. So I went to that, met a lot of people, met a few wholesalers, and then at the same time, I had a buddy, my business partner, Abraham. He's a plumber. We've always talked about doing business together. We grew up in high school together. He knew I had houses, so I took him for a ride at 3 houses that were listed on the MLS and said, between us, we have about $40,000. We should buy a house, we'll do the work, and, we'll unlock value and rent it. And so I took him in, we did it once, and then he saw the path. And then I told him about wholesaling, brought him to the real estate groups, and that's when we really, after the real estate group, something like this is when I'd say we really started investing and becoming like professional real estate investors.
So if you found,
before I was just dabbling.
so that's when you actually started getting like what you would call guidance, right? You had people
Big time.
that were doing it. I don't know. You sort of came up with like Emil. Obviously, you met there. Christian Ard, who's been a
Correct.
speaker, and
Yeah,
like
like Andre Lewis, a lot of people. So going to those groups, networking, and that's where I found the circle.
Yeah.
Like from those investor groups, from groups like this, is where I really found advice and people that weren't telling me don't do this, don't do that because that's what they heard. They're telling me because they're doing it, and so that really accelerated everything. So it went from 2005. Katrina sat out for a while. So 2008, 2011, buying a house. So about every 2 or 3 years, I was probably going to keep that same path.
Yeah.
But once I got in the investment groups, it changed everything. My whole mindset on how real estate was done.
Talk about that. Talk to me about that change and what that looked like.
Yeah. So one thing was obviously wholesaling, right? That was a technique I've never heard of. So Abe and I, we started doing wholesaling. We started contacting. So first, to be a wholesaler, obviously, if y'all don't know, you find a property, put it under contract, and then sell it to someone else to make a fee in between. You have to know the numbers in order to do that. I was fortunate because of Katrina and having to do construction. I had an idea of construction cost based on my experience, so it really helped. And then Abraham, my partner, being a plumber in that world. But we started wholesaling, and when we made this money, we were like, this is great. We're both working and we're making this money. But our goal was always to cash flow and buy and hold assets. From the day one, when him and I started the business, we started buying a rental. We didn't start wholesaling together.
So I want to hear about that, but just I want to pull up and talk about the wholesaling, right? So you started doing deals. Like, what did you do? Like,
Yeah.
how did you get traction there?
Okay.
Like, talk to us about that.
Yeah, so wholesaling, we started out really just driving around. I'd see, a missing meter, an abandoned house, something that needed, work. I'd write the address down, go to the tax assessor's website, mail them, Google the address, see if a phone number pops up. And that's how we actually started doing our deals. My first deal, wholesale deal I ever did, it was in Metairie. For sale by owner, house looked all messed up. So I called him, found out the situation. He did a bond for deed. He was about to get foreclosed on for that. There was a local wholesaler that I kind of would call for guidance, although he kept the cards pretty close to his chest on, how to do what you do. And I told him about the property, and he said, I already looked at that. And he's like, he wants this much money. I said, yeah, no. He's like, I think it's too high. And he said, well, the guy's going to lose it anyway. Why don't you explain what you're going to do? See if you can help him. So I said, okay. So put it under contract, fully disclosed what I was going to try to do. He was like, man, whatever you can do. Like, I don't know what I'm going to do, but I'm going to lose it, and just help me out. So put it under contract. The wholesaler I knew obviously said it was too high. Put it on Craigslist. I didn't care how much money I would make. I just needed to know I could pull it off. And I did. So I ended up pulling it off, and that's all I needed to know.
So you found a buyer through Craigslist?
Through Craigslist, yeah.
Awesome.
Found a buyer
Cool.
through Craigslist.
How much did you make? Did you end up making much, or just a little?
I mean, $3,000.
Awesome.
I
I like that attitude, by the way, guys. Just like, it's not about the money; it's about doing the deal. Because I mean, 3,000 is probably nice still, but once you do the deal, you could do more.
Exactly.
That's the value, right?
Yeah, it's kind of like, if you're playing baseball and you're constantly swinging at the ball and you're striking out, of course it's discouraging. But that first time you just connect, now you can hit the ball. And that's all I needed to do. And actually, that's what I'll tell people that ask me about wholesaling. I'm like, don't worry about, you've got to make so much money. Don't worry about that. Money's just a way you kind of keep score.
Yep.
You know what I mean? Like that's just numbers. I mean, there's got to be another reason other than money. Money's just a tool. So for me, I wanted to know that I could do it. And I did. And after that, I knew it was attainable.
So what did that look like? So you got a first deal. You proved it was possible. Like, you started marketing. Like, what did you? And at that point, you really were just wanting to wholesale. You weren't looking to acquire at that point.
No. So at that point, Abraham and I already had our first rental together.
Okay.
So it was kind of like, we're still looking for rentals, but we know we need a wholesale to generate capital.
Yep.
So while in the process of looking for deals to wholesale, we were looking for rentals ourselves. So actually, the second property we bought, we tried to wholesale it. Everyone told us, bad neighborhood, this and that. And, I think we bought the property for like $10,000.
Whereabouts?
It was between Claiborne and St. Claude on Cluett Street. So like 1500 block. At the time, very rough area. We were there. Everyone had guns in their waist. Everyone. Even the 70-year-old dude next to us had a gun in his pocket, in his waist. And we were there. It was 3 abandoned homes. We bought one. The one next to us, I'll get to that, stayed abandoned. And then because of our construction, someone else bought the one across the street. So we renovated it to maybe flip or do something with. For that one, we raised private capital.
Okay.
How
did you do that?
We just said, hey, we told them what we did. We said, you saw we bought a house. It was a family member of ours. Abraham's.
Yep.
It was like we had some money, and we said, hey, we bought this house, over here. You saw what we did. We're going to do the work. This is what we think. They made a small loan to us. We put a lot of sweat equity into it. And then we actually ended up owner financing that, or a lease option to somebody. So we're all in like $40,000 and did a lease option for $100,000. And everyone said we couldn't do it. We did it for 3 years. He wanted to renew. So instead of taking it back, we said, you can buy us. We did. He made out like a bandit because that abandoned property next to him, after about 4 years of trying to find the owner, we finally found him. We renovated that property, buying that for $30,000, renovated it and sold it for $190,000. So we were all in like $100,000 on the one next door, but he had a lease option on our house for $100,000. But that's cool. We made our money. I mean, we were happy. But point is, we were still, to try to wholesale, we were still just driving for dollars. Started doing mailing lists, postcards, but driving for dollars was key. We would just be in neighborhoods looking up anywhere we went. I mean, I'm going out to eat. I'm looking for that abandoned house and looking for an address, you know.
So you're really finding the properties through the driving for dollars, and then you're using like mailers and stuff, and you call in to contact them. Awesome, great strategy.
So and mailers have been still use those today. I mean, those work really well. I mean, whether it's postcards, letters, whatever, but you know, we still do mail outs and everything like that. So
awesome. Okay. So then, okay, so and what year? So what year is this roughly? Where are we at?
So this probably was 2014.
Okay.
Maybe. Well, no. So maybe 2012 with the one, but I jumped ahead with the renovation of the other one.
Yeah. Okay. So talk to me through that. So you're wholesaling, you know, but you're also buying.
Yeah. So
how did your acquisition? How did you evolve into what you want to buy?
So I guess our marketing was always looking for what we wanted first. And anything we didn't want, that's what we'd wholesale off. So we knew so we followed, I guess in the rental world, they called it a 2% rule. So basically if it could rent for $1,000, we want to be all in on a property for $50,000.
Yep.
Everyone looked at us as like, you're crazy. And I was like, yeah. And we were buying property, not a lot. So we didn't care about the quantity of deals, we wanted quality. Mm-hmm. So, you know, we would just wait, and if it didn't fit it, we'd wholesale it off. Take the money, sit on it. I mean, we'd reward ourselves a little, but we would just stash the cash. Mm-hmm. And then we would come across deals where we slowly would find the ones we wanted and would buy them.
Okay.
So essentially, all in cash, we're making like 12% on our money, but more importantly, we were value buying. So we're unlocking so much equity by buying that way. Mm. You know, so like the house that was $50,000 all in was worth $100,000.
Yep.
And so we're still making 12% and sitting on all this upside equity, you know, and then some were greater than that, you know.
Talk to me about, so you talk about your partner, Abe, like mm-hmm. how did that work? Like how are you breaking up responsibilities?
Yeah. So I have a background in, so I went to school for marketing, advertising, and a focus on management. Abraham, he's a licensed plumber. So he's in the construction world. So he hates to talk on the phone, hence him not being here. Yeah. And I'm here speaking, and I have no problem speaking to people, you know. So I handle a lot of the acquisition side. When I'll do the walkthrough, he'll come with me because we always approach the deals as, is this something we would do first? I mean, some of them we just know certain neighborhoods, we know we're not buying, that doesn't fit our buy box for rentals. So we wholesale it. Yeah. Example, I live in a Bywater. We've had deals come our way in the Bywater. I'm not buying that for a rental. I wholesale it off. Mm-hmm. I mean, it could be a great rental, but that's not what we buy, you know? So, but yeah, so he handles a lot of the construction side, and I handle more of the acquisition and marketing side.
Okay, cool.
Yeah, we basically utilize where our strengths are, you know, in the business.
And it sounds like the complementary strengths, which is great.
Exactly, yeah.
Cool, okay. And, all right, and so then what next?
So, you know, we're going along, we're wholesaling, we're buying rentals, and then we decide we're gonna up it, and then so instead of, if we can't find rentals, we'll buy some of these as flips. With the option, if we have to, we could probably rent them out. So our target was always kind of like a first-time home buyer. So for a long time, if we were gonna do a flip, we'd be sub 200,000. That's where we were. It has to be a decent neighborhood, not overly nice, but like not a war zone. And we would just find these old houses, fix them up, make them much nicer than anyone else on the block, and then, you know, we would sell them. Take the money, reward ourselves a little, but storing it away to buy more rentals free and clear. Yep. So that our strategy is, with our long-term assets, we want to be free and clear for the most part. Yeah,
talks about that, because I mean a lot of people these days will talk about BRRRR, myself included. Right. You know, but you know, free and clear is a good strategy too. Can you talk to us a little bit about that, how you think about it and your approach?
So, like I said, when we started, we always wanted to have cash flow. Cash flow is our big thing. So if you have a lot of debt, it's going to be hard to cash flow, or you have to do numbers and have a lot of properties in order to cash flow, while hoping everything stays balanced. One thing Abe and I also wanted was time. So, you know, where we might be happy, somebody may have 100 properties, depending, they might not have a lot of time. You know, so we were like, we'll go free and clear, a little bit slower, and then have time, and then manage maybe a smaller portfolio. And we knew we were growing slow. So aside from wholesaling and flipping, we were using hard money lenders, and it's like, how can we tap into our equity? Because people were talking about refi cashing out, but we didn't want to do that. We did not want to have this debt always there if the money was just sitting in our bank account, you know. So I started talking to people. Actually, the person that helped me was the person that owned the restaurant I worked for. He was a big real estate developer, both in New Orleans and in the Florida Panhandle. And he always told me, all the businesses I owned the real estate underneath. He's like, you know, he owned a lot of businesses, but he's like, I made all my money from real estate. So that solidified real estate. I told him the problem. Every bank is saying, we don't do these loans. We don't do these loans. We don't do these loans. He says, call my guy. He does these loans. So he puts me in touch with his banker, and then that really set us off to tap into our equity. We got a commercial line of credit against our properties. So although we have debt against the properties, we only have it when we use it. And we only use that debt when we're putting it to work for like quick, for flips. So we use short-term debt to acquire long-term assets free and clear. It's pretty much our focus and our strategy.
So you're tapping the equity in your existing properties instead of a BRRRR where you would do a 30-year loan and like write it out. You're tapping it on a short-term basis. You're using that money on a short-term deal. So flip. You put the money in, you're flipping it, and then you're taking a profit, and that's paying down. The profits is what's paying down your rentals to make them free and clear.
Well, no, we bought a lot of the rentals free and clear just from wholesaling. So we really delayed a lot of enjoying some of the benefits we had. You know, I guess for example,
you bought them all. So you bought them all like free and clear to start with. So you stacked the cash first.
Yeah.
Okay, that's discipline.
So we were still working at the time. So that gave us an advantage. We weren't in jobs that we necessarily hated. I mean, I love mine. The owner told me who to talk to, like the vice president of a bank that gave us the line of credit that we've been looking for, you know?
You still work there, right?
Still work there right now.
Because you told me that also you feel like you owe it to your boss too, right?
I mean, I'm still there now. You know, he might regret it, but I am still there now. But no, he's a great guy. And but yeah, we were just stacking our cash. Like we were working and just like that money did not exist. And all the money from the rentals, it didn't exist. It was just growing and being reinvested, growing, being reinvested. We would reward ourselves, but not, you know, crazy. I mean, here's a good example. We did a wholesale deal, a wholesale deal. You know, it's hard to walk away from a closing table making $100,000 and saying, we're not going to touch any of it, you know. And then, but what we did was we went out and bought 3 condos that at half the like half of what they appraised for. And so, you know, that 100,000, the equity was greater than that, and it started cash flowing right away.
Yep.
So, and then we can still tap into the money now.
Yep.
So, but it is hard to walk away from that table being like, man, we just did this, and we can't even buy a glass of water, or we're not going to buy a glass of water, you know?
Nice. So tell me, you got to tell us about the $100,000 deal. It's a wholesale. Tell us about that deal because it sounds like a nice one.
So that was definitely like the biggest wholesale deal we did. So came from a mail out, you know, sending postcards. So that's what I did, sending out postcards. I get a phone call, check the database. I can't even find this address actually in my database, but you know, so it's like, okay, that's kind of weird, but you know, maybe the universe is talking to us. So it was right off Napoleon Avenue. So we went in, we looked at the property, could have wholesaled it. Saw there was a great opportunity. So we actually called up a private lender on the deal and said, hey, this is what we're looking at. He looked at it and said, so we walked in, I guess, let me say this. We walked into the house and, you know, I said, first question, you know, why are you selling? Why are you calling me? Like, why aren't you selling to a real estate agent or whatever? So they just tell me their story. And so I was like, well, what would you like? And they told me $90,000 for this house. I mean, it was 1 block off of Napoleon Avenue.
Damn.
And I was like, okay. like I had to think about it. I didn't want to seem too excited. So it was like, you want $90,000? They were like, that's all I want. They actually inherited the house.
What sort of condition was it in?
Decent. It wasn't that bad.
Okay.
I mean, we went in, we did a little bit of work to like put it on the market. So we borrowed the money, did a little bit of cleanup, and then listed it and sold it. And, you know, so we walked with 100.
Yeah.
While still, so the deal was much bigger than that. If we would have had this line of credit, we probably would have walked with like 100 in like $30,000 because our private lender had a pretty big interest
Got
rate,
you.
but they gave us that 90 grand, no questions asked.
Yeah.
So I didn't care how much I had to pay him because I already knew how much money.
You were focused on 100 grand, not what you're paying the private lender. Yeah,
I'm not worried about the next person's going to make. You know, that's irrelevant because I'm still going to make money, and I'm making all the money off of their money.
Yeah.
So yeah, it worked out very well, and even so for the person that bought it from us, because I tracked that property, and I want to say they probably ended up making maybe close to 100 grand as well.
Awesome.
When they were said and done. So like everybody won. I wish I would have known what I know now about tapping into hard money lenders, and I would have done the whole thing ourselves. But
Yep.
at the time we didn't, but it still worked out.
At the time, to get a deal so fast with such a big amount of money is great, right?
Yeah.
And you obviously having the discipline to put it into more properties. I mean, I think that's the biggest lesson. I mean, O'Neill Parker, when he was here, talked about that, like starting out making money. A lot of wholesalers or flippers, like you make a bunch of money and you're cool, I'm rich, you go spend the money.
Yeah.
I mean, it goes pretty fast.
Yeah.
So having that discipline to roll it into an actual asset, you know,
Right.
is obviously, it's all compounding for you.
Correct. And so part of it was, if you're investing or doing anything in life, you have to know why you're doing it and what's your goal. And our goal is and was and is still, you know, free and clear cash flowing properties. Like that's why we do everything else that we do. That's why we wholesale. That's why we flip. I mean, yes, we want money to enjoy things, but that's our business. I mean, that is our business model. Like that's what we're doing.
Okay.
So yeah.
And so now, what's your ratio of are you still in acquisition mode? Let's talk about the market now, right? Like,
Yeah.
because things have changed, right?
Yeah.
Well, last year we were asking people, like, what do you see coming? You know, that was sort of the questioning. But now it's like, I think we've seen what came. And
Yeah.
so, like, what have you done more recently? How have you changed your strategies? And
So I'd say, honestly, we're not changing too much because we've always had a very strict way we buy properties.
Yep.
So much so that, you know, we're going to change where we're marketing and who we're marketing to, sort of, but like we're not changing too much because like we're still going to buy. We're still going to buy with the same metric of this is the return we want on our dollar. And it's a very conservative way. So even in this market, it still works.
Yeah.
So we're not changing much because we're sticking to our fundamentals of what we decided, and I guess that's why they're fundamentals,
Yeah.
right? Like when the market was hot and crazy, and people were like, "You should do this." It's just, you know, I'm like, we're not doing that deal. That like we could, and the market's hot, it could work. We wouldn't do it.
Yeah.
Like we stuck to our core of like, I would look at what everyone else is doing, which is important, and draw from it.
Mm-hmm.
But we always stuck to what we want to do and why we're doing it.
Yeah.
And I think, you know, that's one thing to always stay focused on is like, why?
so when that market was really hot, were you not doing many deals? Were you being disciplined in therefore? Because it was hard to, it was great to sell, right?
Right.
But it was really hard to buy. Did you do much buying? Were you still able to get the deals?
We didn't do as much buying. We did
Yep.
probably more wholesaling. We did do some flipping.
Okay.
So more flipping versus like buying rentals.
Yep.
So building capital.
Yep.
You know, although we did buy rentals, it was just a little bit harder at that time.
Yep.
But we still were purchasing if it fit.
Yep.
You know.
What about this year? Have you seen, has it changed much? Are you buying more? Are you finding it?
So like going into this year, we're definitely still we think there'll be more opportunities probably for rentals. You know, wherever that is, I think people are starting to realize that it's kind of weird. Like it's hard to sell your house. So for negotiating, that works. But now the media is talking about, interest rates. So people might be like, no, we can sell our house. So we're still going to be buying rentals. Flipping, I think we're going to be a little more conservative on the flip side.
Yep.
So like our rental side is so conservative that like that model will always be there.
Yep.
The flipping, we may slow down.
Yep.
That when we're a little more cautious. We sold something earlier last year. We have something that's supposed to go to closing end of the month.
Okay.
It was under contract in 1 month.
Okay.
Pretty surprised by that actually.
Yeah.
And then we have something in the pipeline that we may keep or we might flip. We don't know which way we're going to go with it. But I think going forward with flipping, we're going to be a little more cautious. So we might end up doing more wholesaling.
Okay.
And let you guys other people take the risk.
So tell me then, do you ever sell off your free and clear properties, right? Like like, do you sell those from time to time? Are they like legacy? I'm keeping these things, or do you look at your portfolio and get rid of some? Like, how do you think about that?
So most of them we still own. Although the first one Abraham and I bought together, we recently sold about a year ago.
Okay.
And the reason was it was a single family. When we bought it, we had $40,000. We bought it for 30 and had 10,000, a lot of sweat equity. So we really went in there and kept it basic.
Yeah.
The neighborhood increased. We did subsidized housing. We got a great return. But to go in there, we had to put a lot of work to really unlock the value. We sold it for, so we made all the rent. But when we did sell it, we sold it for like $190,000. So we had it cash flowed the whole time, sold it for 190, and then we did a 1031.
Yep.
So once again, leave the closing table with no money in your hand, and then we went and bought 2 other rentals. But it made sense because those 2 rentals would cash flow greater than the asset was. So I think you do need to reposition your portfolio every now and then.
Yeah.
This was a property right off of Esplanade Avenue.
Okay.
And so the neighborhood increased and everything. We could have renovated. We said, no, we're just going to unload it, and bought 2 other properties. And so I think like anything, like any investment, you may need to reevaluate and see, do you unload stocks? Do I sell some to buy this one? So we have done that.
Okay. Do you want to, just for the people that don't know, do you want to explain a 1031 exchange?
Yeah, so a 1031 is essentially where you can sell an asset that you have and then defer the tax payments on it. So if you were doing a flip, you pay taxes on that income. If we were to touch that money and put it in our pocket, then go buy a rental, we would pay taxes. But by finding a custodian, someone that holds your money until you find something else to invest that money in, you don't pay any taxes. So until you actually take the money out the game, you're constantly deferring those taxes and kicking it down the road. There's certain rules you have to follow.
Yep.
But like I said, by doing it, we took all that profit, bought 2 other properties that is cash flowing twice as much as that one.
Yep.
And then we're probably at the same equity standpoint where we were.
Yep.
But I think those will appreciate as well over time.
Okay. So you are checking portfolio, making changes, but it sounds like you're mainly keeping the rentals there. They're mainly,
yes. The main thing is, if we can keep them forever, we probably will. One, they're free and clear, and we can utilize the equity and their cash flowing. So and that will afford us to have a little more time. You know.
Okay. Cool. And tell me, like, where are you buying? Just like geographically, like what's your buy box, like location wise, and what's the sort of property you like?
So we do a lot of our rentals so for our flips, like I said, first time home buyers, it just depends on the leads. We look at the neighborhood. That's more of a numbers game.
Yep.
Could we sell it? Are we buying it? Now probably like 65% loan to value or AVR, so we can make money, or if it goes sideways. But for rentals, we always look at maybe B minus C-ish type neighborhoods. We find we can definitely negotiate easier. They're not war zones. They're maybe right outside the war zone area.
Mm-hmm.
I feel comfortable being there. I'm not concerned about, a maintenance person going, but people ask me, would you live there? The answer is I would. If I had to, I would.
Okay.
It's not that bad.
Yep.
And I'm we self-manage, so I'm completely comfortable showing it to tenants.
Mm-hmm.
And we're also kind of looking at, when we look, like, where is everybody at? Well, I don't want to buy rentals there. I'm going over here and looking and starting to buy. Yep. And then, maybe buying, like, for example, the first house where there was 3 abandoned homes.
Mm-hmm.
We bought one, someone else did, then we bought that third one. By the last one, the values went up, So, but areas right now, heavy on the West Bank, actually.
Okay.
Really on the West Bank. We do have some in Metairie, St. Bernard. St. Bernard Parish, we actually like Violet area.
Okay.
It's a little further out.
You see cows and stuff driving out
there. Yeah, you do. They call it down the road.
Down the road,
So we like Violet because a lot of people don't like Violet. There's actually one block where we own a double, where there's one owner that owns a lot of the properties. He wants too much for them. But if we can buy more, we would. And it's an area, for that area, people are like, oh, man, that's a bad area. It's like, it's not that bad.
Yeah.
not for St. Bernard Parish, you know.
And you're probably getting a great deal, right?
Exactly. I mean, we own a property in Little Woods.
Yeah.
You know, so Little Woods is kind of a rough area. Where we're at, it's actually like, we got so lucky, a sweet spot.
I like Little Woods. I don't know.
You know, I mean, it rents. You know, like 2 blocks over, pretty bad. But we found this great spot, and this is another crazy story of you ask the seller or anyone, what do you want? You know, so this guy called us for this house, and he's like, oh, I just need to sell it. Blah blah blah. We're like, okay, no, you know, obviously. And I was like, well, you know, what are you looking to get for the house? What would you like? And he's just like, man, I know this is a really bad neighborhood, but I'll take $10,000 for it. I turned around. I said, I need to talk to my partner real quick. So, you know, we turned around. We're biting our lip like, really? You know, and I was like, that's what you'd like? He was like, yeah, man, like done, you know. And it is a pretty rough neighborhood. But that price point, like, I mean, it was amazing.
Yeah.
And we still own that. Like, we'll probably never sell that property. And we found this tenant that's awesome, older guy that is like, I'm gonna die here. And I jokingly tell him, well, don't die here. But, you know, I want you to stay.
Can you go to the hospital first?
Yeah, stay as long as you can. You know, but you know, and I guess the point of when I say leading to like where did these great deals come from, is asking people, you know, what's their situation, what would they like, and it goes back to money is just a tool, and I'm sure you've seen that, especially like if you're going to do an owner finance deal or any creative thing, you find out most people don't need like $50, $100, $200,000 cash in their pocket. I mean, some do, most don't. You know, like, I mean, they might need the 50 or 60,
Yep.
but for the most part, they might not need all of that. And then that leads into a whole different conversation of like, you know, structuring creative deals. One of the rentals we bought from a landlord, and you know, we asked her what she's doing, and she has a whole bunch of properties. Asked her what she would like. We came up with a very good, agreeable terms, you know, at the time. So we have a 5% interest rate with her. At the time, that was high, you know, but the numbers made sense for everybody. But just by asking, what would you like, and would you consider this, instead of us coming up with all the cash, we had to come up with very little money. I think it was, maybe we're going on a vacation or something. You know, so we bought 2 houses essentially out of pocket, $20,000 that were already rented.
Yeah.
And I was just like, what do you need? And she was just like, oh, we're tired. Like, they were painting the house. They're like, if you buy it now, this is the price. And we're trying to go on vacation. They were going on a nice one, apparently, with $20,000.
Yeah.
but you know, asking the questions, like, what would you like, or what do you need? You know?
I mean, that guys, if like you're not taking notes, that's a pro tip, right? Like, and it's very important because I think we get caught up in value, what they want, and like, it's what they want isn't money, right? And even when they were like, when they need 50,000 or whatever that number is, they don't need 50,000. Like they don't want money. Money's worthless as itself, right? It's what are they doing with that money? They want to go on a vacation, you know.
Right.
Some of them want to put it in a bank for retirement, right? So it's like, that's when the seller finance is coming up, because like, why do you want to take this tax hit and put it in a bank? Like, I'll pay you over time by securing the real estate. So it's like, just don't assume what they want, ask those questions. That's a pro tip. And the second pro tip you dropped, if you didn't catch it, was just don't be, when you hear the great deal in front of you, don't be too eager.
Yeah.
Make sure you call your business partner because sellers, I think a lot of the time that they want what they want, right? So in this case, 10K was what they wanted. They were happy, but they are scared that they're going to leave something on the table, right? So if they feel like they left something on the table, even though 10K is what they want, they're going to feel bad about that. So if you're too eager, then they're going to kick themselves and go, wait, I left something on the table. So you just, you know, when you get that great deal, like, take it, but just.
Well, everyone has to walk away being happy. Like, you don't want, like, you really don't want to say, oh, I won the negotiation, right? You want to walk away where everyone is happy. Everyone feels like they won, and you do win. It's you know, you don't want someone to feel like they've been taken advantage of or you've been taken advantage of. You want to walk away where everyone's happy and content, because, you know, I will say some of our better deals have also come from just word of mouth. I've heard you talk about it, Steve, before, like with your wholesaling business, you know, if you might buy a deal just because you said you would.
Yeah.
Or like a lot of times you'll ask people, you know, what do they want? Or you look at the property. We're the same way. Like someone calls us up, one of the first questions, like, you know, you're calling me, what's going on? Most people call a real estate agent. So I find out what's going on with them. And then also, you know, even if I can't make money in the deal, but I can help them, I tell them this, and I do live by it. You do right by people, the world will do right by you. You know, so we bought our last house, talked to the lady. You know, it's a pretty tight margin. We did it. Like we're gonna make money. Was it worth it? Maybe. We're making money, right?
Yep.
But with the market being hard at the time to find good deals, I was like, we'll still do it. She was happy. Well, her nephew called me.
Yep.
And was like, hey, I have a property. We're a little off on where we need to be, but I'm talking to him. But she was like, this person helped me, you know, and now I have a referral on her nephew. I think, and I'm trying to work with him because I don't know that I'm the buyer, but I'm still more than happy to try to like refer a realtor, somebody that can make, like that fits what he needs. So, you know, going to what we said also about money, your relationships you have with people are super important, you know, and your reputation. And so, like I said, we always just try to, going back to negotiating deals and all that, you know, you do the right thing and the world will take care of you.
Absolutely.
You know?
Yeah, and you see, like he obviously cares about his brand, and like I know like the people who are doing this as a business and have a long-term vision, like they're trying to do the right thing, because it's like when you do that, the brand speaks for itself, and you will get the benefit long-term. You know, if you're just trying to make a quick buck and you're gonna do something dodgy, I mean, you're being greedy now, but like you're actually shooting yourself in the foot, because doing the right thing will get you more in the long term. So you actually make more doing the right thing. So that's really good advice. Tell me, you know, so you started in a different time, you know, 2005. You know, you've come a long way. You're doing lots of great things. Like, if you were to talk, some of the people in this room, I see some seasoned people. I think some people are new as well. So like, for the newer people in the room, like, what advice would you give them today for like getting into real estate?
So, piggybacking off of what you said, starting a business and a brand, a lot of times you'll hear people saying, especially when it comes to wholesaling, I've got this hustle. You can get a hustle, or you can start a business. You know, and so if you're looking at real estate as just a hustle, that's all you'll ever be doing is hustling. You know, it's not I mean, it may have started as like a quick money, but like really, you know, to be in this game, like you've got to run it like a business. And so for newer people, I'd say, you know, don't look at it as like, it is quick money and it can be great, but like look long term. Don't be short-sighted. You know, enjoy your money. Like, you know, you get some good deals, do it, but also reinvest your money. Also, get educated. I mean, you know, like read as much as you can, groups like this, YouTube. Don't be afraid to YouTube anything. We were doing something and someone was like, wanted to hire us. I was like, man, you could do that? I said, man, you know, I would, but I mean, I YouTubed it, and I don't feel comfortable taking your money, you know. And it looked great. I mean, it did, but you know, we were honest with them, you know. But I would say for new people, get educated, and also think about why. Why do you even want to do this? Like, why do you want to do anything? But like, why real estate? Like, or why invest? Or you know, find out why you want to do what you're doing. And if it's just for money, it's going to be short-lived, and that's for anything in life. If you're just doing whatever for money, you're going to burn out. You'll always be chasing, you know, money.
Yep.
You need to figure out why you want it. And for the newer people, just don't get discouraged, you know, just stick with it. I mean, I probably spent, before my first wholesale deal, it's probably like 6 months of just like calling, no. Then I get this deal, and this other wholesaler that I totally respect, you know, is like, man, I don't know if that's going to work. And I said, well, I'm going to do it. Right. And it finally happened, you know. About making a lot of money on a wholesale deal. I've done one where I've made $250. So, you know, it helped the person out.
Yep.
And if you're new, be honest, like to everyone, to the sellers, you know, like to the sellers, your buyers, your co-wholesalers. I've had, people try to be snakes sometimes, you know, and your reputation is going to be key. So like if you're starting out, remember today, the first relationships you make are the ones that's going to carry on forward. Like I've known Emil for like 10 some odd years, you know, and we started in a similar room like this and a few other people, and they've honest dudes and the reputation speaks for it. Hence him putting on something like this. And there are a few other characters that, you know, they've had some seedy reputations. They're here, but there's a lot of people that are in this business that don't associate with them. And so if you're new, don't treat it as a hustle, build a beautiful brand for yourself, and, you know, just do the right thing and keep pushing forward, you know.
Awesome.
No matter how hard it is, just keep moving forward.
That's great advice. I'm going to get some questions from the audience in a second, so get them ready if you got them. I'll just reiterate what you're saying. You said, so it took you 6 months of your first wholesale deal?
Yeah.
Took me 6 months too, right? So it took me 6 months to do my first wholesale deal, and I did my first, second, and third in the same week, right? And it wasn't that I did it right that week that I finally did it right. It was all that effort of that 6 months came back. So, you know, Mike could have stopped at 5 months. I could have stopped at 5 months. Like, you know, for people in the room who like maybe haven't done the deal yet or have only done one or so and are working hard, like don't stop, keep going. So I think that's really important. I like what you said about only making $250. I can actually beat you. I made $0 once, right? so I did a deal. You know what though? It actually is probably one of the most important deals I ever did. I was really early in my wholesaling career. It was a duplex in Orleans Avenue, and like I just got some of the rehab numbers wrong. But man, I met so many buyers showing that place, and I learned, people like taught me stuff. I learned so much, and a lot of the people I showed that property ended up buying properties on them in the future. I built relationships with them. I learned rehab costs. So like I made $0, but man, that's probably the most important deal I ever did.
Yeah.
So don't, again, you know, you do that and then you might get your 100K. I haven't got my 100K yet. So I want one of those.
Yeah. And, you know, I guess thinking about, you know, you had me here, it's like we have a portfolio free and clear. You know, so I know it might get a lot of snakes in the room when I say this. Like, I don't mind what Dave Ramsey kind of talks about being free and clear, right? Like, I think that's important. However, I know we all use debt. We still use debt. We just use it differently. We don't go into long-term debt. We keep a very well-balanced, you know, like we manage that debt very well because debt is important. And so like last year when everybody, hurricanes and vacancies and insurance going up, I mean, I know for us it got a little tight, you know, and I can only imagine with some of the people that were refi cashing out when the market was so hot, I don't know, but if it was tight for me and I'm free and clear, some people might be negative cash flowing or it's pretty tight. Maybe not. And if you're not, that's awesome. So, but for us, we can deploy that. So if the market ever gets tight, we just don't do anything and we cash flow our rental. I will say this, we're at a point now, if we want to start burning and like pick up this heavy debt load, we've got a business that's making a profit. So like we kind of did it like, you know, differently. We stacked cash up front, built the assets up front, and now utilize that to strategically use debt. You know?
I think what you did is really smart, and I think it goes to the point. There's no right way to do it, right? So because I'm different, and me, Mike, we're some pretty. I always enjoy our conversations. So we often chat because like I really like what he does, even though I was doing a lot of BRRRRs, and I like the BRRRR, and we would listen to each other because I think we liked each other's perspective, but we're still like, I'm still going to do my strategy, but I like what you're doing. There's something in there like to understand. So there's no right or wrong way. You know, there's lots of different strategies in real estate that you can do. No one's right and wrong. When you listen to speakers up here, like you're hearing their story, doesn't mean it's the way you need to do it. You know, some people you're going to like more than others, but they really, you know, we're in New Orleans, right? Make a gumbo, like take a little bit of this, a little bit of that, figure out what you know, you want to do and take that action. I really like that you, I think the most important thing I take from this story is just the beginning. He didn't really know what he was doing, right? And that's a lot of us all the time, right? He didn't know what he's doing, but he did it anyway. And now you've learned. And
I
now
don't
you
know
know
that I know what I'm doing now.
but you're probably doing things you don't know, and that's moving forward. So I think that's important, you know, to take those steps. So I appreciate that. We'll get questions in the audience. I guess just for you as well, like you're a buyer, right? So
Yep.
so wholesalers, make sure Mike's on your list. You bought a deal with me, like
Yeah.
so Mike, he does wholesale, but he buys too. If you're looking for deals, he's a wholesaler.
Yeah.
Get on his list. How else can I help you? Yeah.
Yeah, so I guess for us, I mean, so I have buyers that, so I have buyers. So if you need help moving a deal, I can reach out to my buyers. I look at them first for me. Our buy box, like I said, it's pretty tight, but I still want to see everything, right? Because that also is data into the market, what other people are doing. So I'm just always looking at data coming in. Yeah, I bought something from you. I bought from other wholesalers because sometimes the deal's not coming through across your desk, So wherever there's a deal, we're looking to buy. So definitely, I would love to be on anyone's blast list because I'm always looking at it. And if you need help moving something, I can always reach out to the buyers I have. We like single family homes, slightly older areas. I'd say like like Westbank is where we're at now, but we'll look anywhere. I mean, if it makes sense, I mean, we'll buy it.
Yeah.
And then flips. So flips are a little different. I mean, we're looking for first time starter homes. So probably 250 and lower, although we might want to keep it closer to 225-ish. Depends on the area. St. Bernard Parish, we're kind of in between because we see a lot of stuff sitting there, but if you got a good rental, we'll buy it, especially if it's in Violet or something. Like we like those, that area down there.
Cool. Awesome. Well, that's great. So I'm going to open it up for some questions for the audience. Has anyone got a question for Mike? Sage, you can start us off. Might get the mic to you. Courtney, you want to run the mic?
Can you talk about, you said you still work a job?
Mm-hmm.
Very interesting when I see someone very successful in real estate, like Sterling used to work a job for a while.
Right.
Can you talk about that?
Yeah. So I actually looked last year. I only work about 35 hours a week. I thought I work a lot more. I'm in the service industry. I manage a restaurant. So working 35 hours a week as a restaurant manager is completely unheard of, right? So I'm very fortunate to I'm in a sweet spot, like where I'm working. I work nights. I do have a family, but I keep it pretty balanced. So so while the kids are at school, I'm knocking out real estate stuff. The phone goes off like when it's family time. Before I used to be like in this heavy grind. So I really, set it all aside, and I'm still working right now. That's going to change soon, but I'm fortunate that I have a job that I don't mind, right? Like so I'm, it's starting to get to a point where the cash flow is coming in where I'm like, yeah, maybe I don't need to be here as much. So I'm going to probably sidestep sooner than later. But I mean, like I said, so first I've been with the company for like 23 years. So obviously I like it. And then also they're the ones that put me in contact with a VP of a bank to get us this line of credit. So it's been a good relationship, but I am getting to a point where point being, aside from money, I want more time, especially having a family now. So I'm looking for time, and that's the only reason probably scaling back,
And I'm just on that, and you've told me before, like I don't really need it, but like I like it, and
I don't, not that I don't need it, but it's easy. I mean, I guess it's easy money, in a sense. And also, so if you're wondering how do you do the real estate and all that, with the real estate, we self-manage rentals. We use technology to help do that, so that frees up a lot of time. I do have a partner. We have pretty much like a full-time maintenance person that helps us, so I'm not running everywhere like it was in the beginning that we pay that helps alleviate that. And as far as like wholesaling flips, my partner does a lot of work, or we'll hire GCs. So I'm more phone, computer, I do check the property since I'm the face for the rentals, but overall we utilize technology a lot to free up time.
And that just the having a job was actually a bit of a theme of speakers that we noticed. Emil picked up on it. So Emil actually got a job last year as well, right? And he didn't, and he got it from the speakers. Sterling, I think, still has a job. He at least did like very recently. Mike Fernandez, who was a speaker, has got a job. O'Neill Lefties, we spoke about like waiting for the right time. Like it was a theme. There's not. I mean, I've never had a full-time. I've never had a job really. So so I'm not in that camp, but I get it, right? And it's. Some people think, oh, you don't want to be an entrepreneur, you shouldn't work. it's fine. If you like your job, like it's a nice, steady stream of income. You see Mike's conservative. There's nothing wrong with that, you know?
And another thing to think real quick too. So all I'm really doing is trading that job to be more in my own business, you know? Sort of, because I want more time. Like, I mean, we've kind of, like, we'll do more because I'll be more available. But ultimately, you know, the job does help with certain aspects, like not so much with commercial loans, but like if you ever need, I don't know, a regular loan for something, you have a W-2.
Absolutely.
And that's kind of important. Now, you can give yourself a W-2 working for yourself, but, you know, yeah, I am pretty busy. I will say that. But that's fine, you know, because all this is a means to an end, which where we're getting to over putting the time in early is coming to that point, you know. Real quick insight. So I started investing. All I knew is when I turned 17, I told myself, well, when I went to college, they were like, what do you want to do? I said, I don't know what I want to do. All I know is that by the time I'm 40 years old, I want to have enough money so no matter what I'm doing in life, I can walk away from it and not care. That was my goal. So everything I've done since that point, and the person was like, that's ambitious. How are you going to do that? I said, I have no idea, but that's what I'm going to do. Mm-hmm. So I started investing in the stock market, things like that, and then came across real estate, and that it is the tool. Like, I won't say I think, that is the tool that is affording that. And actually, I've achieved the goal, but I just still happen to be working by choice.
Yep.
You know, so.
Awesome. Are there any other questions? Everyone shy, or you've answered all the questions?
You did a very good interview.
Maybe. Cool. We'll do needs and wants in a second. I'll get Courtney to do needs and wants. And afterwards, are you gonna come for drinks afterwards?
I think I'll go for a little bit. Yeah.
So afterwards, we go to Gattuso's. We got the address at the back. So make sure you head there. But we'll thank Mike, and then we'll get Courtney to do needs and wants. So thanks, Mike. That was awesome.
Thank y'all for having me. Thank you.
Some of you who've heard my story, I'm a big fan